Greetings, market rebels, and welcome to this week's macro measure combined with sector situation. It is Friday, December 13th, 2024. It's about 2:40 p.m. here on the East Coast. I'm Wayne, and we're going to get right into it. It's been really a very difficult week. I'll explain why shortly. Here's our trusted disclaimer for Market Rebellion. Here is our trusty intellectual property rights notice. And then here should be a last week's sort of quick summary, which we went with betwixt and between because we had such a strong trend. Seasonality tends to be very good. There's several seasonality views that support the market really moving higher into the end of the year, into the new year, things like that. Post-election, the whole works. But we noted that there was massive complacency out there. We also said that we felt like we should be at DEFCON 2 just because of our take on things. We kind of held off for a long time without going to a tabs check. And when we say tabs check, what we usually mean is we're going to check out a lot of information we've amassed and quickly. Most of it's on the risk side where things continue to get risky or risks that are being avoided. So it tends to be really more of a negative, keep your discipline type of reminder, and to not be caught off guard by sudden market shifts. But we went with that for the first time in a while. I thought the timing was right on that. We were at close to pretty much overboughtness everywhere. Talked about if you were rolling, fine, great, but roll even to and out of the money. Don't want to get caught. You also don't want to leave the market too early. We also talked about that these issues do crop up from time to time, but that it takes a while sometimes for the market's music to stop playing, and the issues can be ignored for some time. So you also just don't want to be a wallflower. So we talked about that. We talked about there was a massive fix hit. We talked about how things could maybe go off the rails a little bit if the Trump agenda, which supposedly is the underpinnings to the rally we've seen, that's the story that's been given to us. If some things started to not work out there, I guess maybe some aren't. We'll have to see. Maybe they still are. I really can't say for sure. We did know that the world wasn't firing. Really, even though there's global easing that's synced up, which we've talked about several times, and the forecasts right now really aren't as stellar as you would think, especially given where they've marked stocks up to, the valuations, the historical metrics comparisons just are extraordinary relative to what's really happening, not only probably domestically, but internationally as well. We joked around a little bit there about don't hate me because I got to show those my OCD makes me sort of show the tabs from time to time because I think it's important for people to see the risk side, especially when the run has been very good and also it's getting a little long in the tooth. I hate to see people give their gains back that they work so hard to amass. I think that missing out on massive pullbacks, in other words, sidestepping massive pullbacks, is one reason you can get super performance, or one way to do it. Maybe one of the more important ways is just to beat everybody else if that's what you're trying to do. And in a way, even if you're not, you sort of are because you want the best results you can get. So not getting really caught super long at the top is helpful that way. Anyway, we talked about a couple different names, which I'm not even going to go into. And we went to real-time charts. And so I'm just going to leave the summary. We probably had fortuitous timing last week, and you can see there's a typo there. And that's a good typo because that reminds me to get back to, it's been a really disastrous week for me. I've had a lot of problems. I've had the death of my motherboard on my desktop that supports all of my analytical tools, really, and more. So it was really a blow, a gut punch. I've been working on my laptop. That's just utterly destroyed my productivity. I guess I learned too that I need to go get a new prescription. I'm really struggling to see things. That's probably why I didn't see the double I and the timing on this slide. I guess with the fortuitous timing. I didn't even see that I had doubled up on that. Not only that, but I think that I'm having difficulties with my eyes, where I'm now starting to get my eyes are just really struggling. I guess the best way would be to say that my eyes are almost like shaking in place. I can't even explain it. I've never had it happen before. So it's really been, as I said, it's really been a rough week. So I'll be talking with my wife, who has been part of a retinal surgeon's practice for most of her career. So anyway, I'll be getting to that. I can't access my full layouts. I'm just glad the week's over. I need a break from this for my eyes, because my eyes are just shot. So I'm going to do the best I can. It's going to be a tough one, I can tell already. And I've got my laptop certainly doesn't like Thinkorswim, PowerPoint, a browser, Zoom, all running at the same time. So it is what it is. I'm just going to go right into the streaming discussion, so not to waste anyone's time, which is what we did last week. Just kind of do the best we can, without a lot of points to cover hopefully most of what I care to in my prep that I was able to do, which was not as much as in depth as I typically would prefer that it would be. But I do think, getting into it, that there has been more damage done to the market this week. It's definitely concerning. And as I said, we had fortuitous timing to kind of focus on that risk side last week. So hopefully everybody was ready for maybe not a great week in the market. You would never know by certain things, but by other things you certainly would, meaning like IWM and the diamonds have had a rough one. Meanwhile, they've been able to support SPYs, and they were able to keep the Qs going. Anyway, excuse me, concerning the concerning issues are there, but that does help us in terms of laying the groundwork for the birthright rally, because it seems like the financial media just has to ballyhoo that every year to the point where it gets ridiculous. I can't even listen to it anymore. But they've got everything teed up for Santa and all these other historical rallies. And not to say that they don't happen, but I just feel like they talk it to death, and they start drum beating it to death early, it seems. But anyway, excuse me. We do have this strange inversion away from where we were, but back to where we were, which I'll try to talk about that. And what I mean by that is really that XLK, XLC, maybe SMH are sort of popping up a little bit here and holding things together to a degree, while so many other things that we fortunately noticed started to become problematic. In fact, the dollar is rising again. The yields are rising again, and we had massive VIX UOA. Again, it's on the call side naturally, and there's some buying that we haven't seen. We haven't seen a lot of VIX activity, and it's starting to pile up in January and February, and I think even further out in time a little bit. So not sure exactly what that means, but when people are buying 50,000 lots, 128,000 lots, things like that, it's probably worth just taking a look at things and saying, why would they be doing such an outer month upside, this, that, or the other thing? But it seems like there's enough folks that are willing, or that are out there. So at least some are willing to acknowledge that maybe there's some risk despite what the VIX is doing. The VIX itself isn't doing very much. So on that note, let's stop the share. Let's get rid of, I'm going to dump, hopefully dump this PowerPoint to try to free up some resources for us. And I'm going to try to bring us to the charts, and hopefully this will come right back up when I share. And I don't want that chart. Please bear with me. I'm really overtaxing my laptop to try to do all this stuff. And okay, it doesn't like that. I have to actually have to reduce things before I can come back. So it doesn't like that I'm trying to share my screen start out in a certain place. So hopefully there's one screen. Let's get to this one though. I really want to start right here. So I'm starting out with IWM as part of the discussion here, because you can blame me for this in, let's make sure it's sharing properly. Yes, it is. Okay, yeah, because I was looking at some ideas, and Ryan and I always talk about Rebel Pit Pro, the 4 names we're going to really put out. And this one was a little bit of a, I don't know. We put it out on Monday. Thought it had a chance of falling apart, or right, if they did try to just continue with this market, the 20-day they would use that to really try to get it going. Unfortunately, I think what really happened, which you can always say, well, maybe it will matter, maybe it will turn things around, maybe it will intensify things, but that midweek number with I think it was CPI or whatever, that really kind of monkey wrenched the downward slide in IWM. But still, we got that, and I think coming into the week, that was the thing we thought probably made sense for them, most likely scenario-wise, to have a little bit of a slide now, and that would set them up if they did. I wasn't looking for anything horrible. I think I mentioned that. I was really just looking for, let's cool things off a little bit, and then let's see what happens. But you can see how the Diamond's fortunes, right, they're not as shiny and brilliant as they were only about a week and a half ago. So that's a decent change there. There's still unfilled gaps there, but Diamonds also had, a fairly rough week this week. So 2 out of your 4 had a rough week. I would say, let's take a look at the SPYs. And I guess you could say that they did not have the best week either, right? Since you closed here, you're down small. So not so bad compared to the other 2, but certainly at the moment still down. And I think this is essentially confirming what we were getting at, which is that we were due. I think we talked about this line in here, that support line, holding above there. And if you didn't, where you go to. So again, I think it was good timing for us to come across some of the things we did last week and just be ready. What has bucked this sort of breather that we were talking about / pullback that we were talking about, what's bucked that has been the Qs. And these were not doing all that much really. To start the week, they have managed to bounce those back. They've gotten a couple big names going. And again, they're kind of using the mega caps to mask a lot of the problems in this market that have developed in the last few weeks, I think. But the Qs today, Avgo's helping the situation with the earnings reaction it had. I don't know if it's still up as high as it was. It was up quite a bit. Yeah, it's up even more. So there's just another one of these dramatic reactions. Let's take a look at the mega caps, and I'll do the best I can with, excuse me, with it. I'm just really I think I'm coming down with a cold. I think I've got this. My eye is just, both eyes actually are fluttering a little bit. It's very strange. I never had that happen before. Let's see, NVDA, TSLA. I think I got most of them there. And you'll see, right, they're hanging in there now, but they've had a pretty good week overall. You can see here's where we closed. They're up nicely. So they're kind of helping, some of these are obviously, well, they're in the S&P 500, and they're also in QQQ. And so these are doing a great job holding things together. And the other thing that's also helping a little bit is SMH, where we had said, if this pullback was shallow, keep an eye on it. Unfortunately, Tuesday, it just got smoked. So that was the end of the shallow pullback. The bullish story did not develop in the market, and therefore this did not develop as well. Had they both been acting bullishly and this held up with a 50% retracement or less, then I would have been thinking more about this as a possible short-term trading opportunity. Really, this is not that great of a trading opportunity because this really happened on the gap, right? So, but that is hanging in there, and that leads us to XLK, right, which is very similar. That's hanging in there. XLC is also hanging in there. So that establishes, right, that those are hanging in there. But let's take a look at our sectors. And I hate doing this all on this little computer here. This is ridiculous, but especially, well, that's not the right one. especially because my eyes are just so, I hate to belabor that, but my eyes are just so, they're really struggling at this point. Um, I feel like I don't. Oh, this is masking that. So let me get zoom out of the way. But this is the grid of 12 that we often look at. You can see XLK over here where I'm at. This is hanging in there against its trend line. The ever popular XLC communication sector hanging in there pretty well. Probably need to adjust the line a little if I can on that one for now. But that's hanging in there quite well. And still, I would say still above trend. But you can see, right, we can look over here where I'm at in XLE, top left, really another rough week, right? XLF, which was a world beater for a while, that's slid under. That's sort of threatening to close, to come back to the trend line. The high here, maybe even close the gap under the right or really wrong circumstances. Transports, XTN, we're in a little bit different of an arrangement because we're on my laptop and I don't have access to all my more modern layouts. This thing also looking similar to XLF. So transport's not acting well. Healthcare, usually defensive. Even that's had a really rough week. You can look over here and you can look at the consumer sectors. Staples hung in there. So has discretionary. So again, Americans spending a lot of credit card usage more than likely, as usual, and those are hanging in there. So we've got to give it to the American consumer for spending till the last moment, to the very last moment. But your real estate sector crushed. This is over here. Here's your materials, which is this, and I think XLI just making the Dow's life this week and last week miserable. And we noted this last week. And even XLU, really having another rough week. So a lot of the market has really gotten clobbered, or is still maybe getting clobbered, or could get clobbered further. Some of it's hanging in there like XLY, like XLP. And then you've got other things that are certainly still very much hanging in there where they've really sort of held the market up. And for the longest time, we've been saying when this leg of the rally started, really over a year ago, the early part we talked about XLK, XLC leading, SMH leading, and then they fell out of fashion. A lot of other sectors came into fashion, took over the lead. But lately, right, the last week or two, these XLC, XLK have really probably done most of the heavy lifting for the market. But that still can't really hide the fact that this is happening, which should appear right here, I think. This should be our kind of market breadth screen. I'm just going to switch this over to SPYs. I don't want anyone to be confused to think that this is just us looking at XLC components or something like that. And you can see that without really going into the details, you can just see that the health of the market technically has been better, right? This has really tailed off. It's become a problem. You could say, well, maybe it's overdone already. Maybe it is. But a lot of things just are not looking as solid as they once were. You can tell it's an older layout. On this particular one, I don't have the stocks above the 50, 100, 200, things like that I have on the newer layout. But anyway, you still get the point. So it's been a rough one. The sectors tell us that. The market breadth indicators tell us that. Other things that I think are worth noting are the fact that if we look at TNX, CGI, this should show us the 10-year yield. This has powered right back up again, right? So this is the market, really bond markets moving, they're moving yields back up, right? So it's a problem there. I guess people are, I don't know, I guess people are demanding a greater return through market forces, I guess you would say, to be in bonds. And so here we go with this rate rising. So you're getting back towards not the highest of the year, but you're getting back towards the intermediate high, right, between here and maybe the highest yields of the year. So that's probably not a great thing, that yields are being that sticky and staying that elevated. dollar DXY we can look at to get a sense of what the dollar's doing. It too is moving back up. And for the longest time, as I said, usually, and it's not lockstep, but usually when you have the dollar moving up, that does make things rough for stocks. Yields moving up usually makes things rough for stocks. And especially, right, things that are sensitive like the IWM. So this is sort of part of my overall, you could say, calculus in selecting this name this week. I don't think people lost on it, but I think it could have been sometimes, right, it's just the way that things unfold. So we usually get the idea out on Mondays. People start trading it maybe late Monday or Tuesday. So had this been a Monday and we just broke down, that would be what I would call an easy week for people. Never really threatened to break out to the upside. And you just started out ugly and pretty much stayed ugly. So you had a chance at really getting a good ride in there with rolls. Not to say that it was easy. It's just when you get this little midweek wrinkle like we had this week, it makes it tough. So that's another case of where, the path can be tough on you, where you might have had to get in. Maybe you got a little something out of it. Maybe even you got chased out of it for a small loss. Then you'd have to get back in again. It's not as easy of a trade as to when you just catch the trending motion in stride and stay with it. But that did sort of play out. Our take on things, I think, did sort of play out where if you want to talk about a most likely scenario and something maybe that was overdue or at least due, you got that in 3 out of 4 with things narrowing leadership-wise and courtesy of XLC, XLK, Qs, and maybe, as I said, maybe SMH. So the big question is what's next? So perversely, right, this does lay the groundwork for a good situation for the market, because it's a lot easier, I think, to really gather steam for a technical rally, right, in the second half of December. There's got to be a lot more interesting or intriguing buying opportunities out there for people now that so many things have pulled back to a certain extent. Now, it could still be right that the bears have the story right, and they were right to sort of sell this week or intensify their selling or whatever you want to call it finally. But they might still be early, right? That happens a lot with bears where the internal plumbing of the market, the natural order of things, the natural ebb and flow favors things being very strong through the end of the year, which we can't take that away from them. So maybe they get that. And then we have another situation on our hands where that markup is very artificial. It's overdone. Just saying could happen. And then early in the next year, you get that sort of reflexive selling like, hey, I escaped. I pushed my tax implications out. I'm good to go. Now I'm going to dump this right away because I feel like I really whistled past the graveyard the last couple of weeks with this market. Could be the case, but remember, a lot of other factors call for things to continue to move higher, seasonality-wise, at the start of the year, and I think in the first quarter, based on the presidential election cycle, other factors. So it is what it is, right? It can always throw something to kind of counterbalance the main things, but we have to mention them to try to be objective and fair. I think as of right now, if I go to an individual ETF like we've been covering them, right, I would think, and they don't really listen to me that often, but I think if I were the bulls, I would get this washout done early in the week. I'm not predicting this. I'm just saying if I were them, I would let the washout happen here on IWM, come back into either near the trend line or the 50 SMA, which I kind of hoped we'd get to this week. I kind of thought that there was a chance we could get really a 4% drop in the week, which is not something you see all the time. But I thought, man, that would be a good little trade given how cheap some of the options were in IWM, and it's often a very good mover. But the gang didn't really let that happen, right? I thought we were going to come into here. It might take a little bit longer. I think that would be the smart move if I'm the gang. I let this thing sort of get oversold in the short run by midweek, and then that sets me up for a nice little turnaround play and start working it back up. And then right? Then I'm at the 20th, and then you've got the Christmas holiday and the end of the year that you can try to goose into to kind of get back to where you were. Not saying that's just a scenario. I'm not saying that's the prediction. You know me, I'm not really big on predictions. I'm big on going with the flow and then trying to anticipate when the flow may shift, see signs when it may shift, or if it does shift, then try to reverse the momentum and reverse course and go with that momentum shift back the other way if it makes sense. But anyway, that would be what I think should happen. What will happen? Well, excuse me. Your RSI is only at 44. So, excuse me. I said I'm coming down with a cold on top of it, I think. So if you get down a little bit lower for kind of a bullish chart and a bull market in theory, you really don't often get too far below 40 on RSI when you're in a bullish trend. So if you just come in a little bit more, you would probably be at a reasonable oversold level, even though you're technically not oversold if you come near 40 on RSI on the daily. But I don't know if they'll do that. You know, we'll have to wait and see. As of now, I would say you can see how many negative candles are here that are pretty much right all blue, which just means these are actual negative candles or bearish candles where we close below where we opened. And this will be the 7th in a row where we close below where we opened as it stands right now. So you don't really get extended periods too much for too much longer than that. So that makes our job a little bit more challenging to predict, what do they do next week. But I would say that this whole thing should really play out, and just kind of this selling should fizzle out would be probably my most likely scenario. And then you try to find support and go from there. An alternative scenario would be that we extend this line. I think this is a pretty good line. And the gang early in the week tries to come up to here. If they can't get through the line, then you're taking longer to get down to probably the 50 or the support line that I'm mousing over. Or you're able to bust through it quickly. If they bust through here, and then you could just be off to the races then. But if they bust through, pull back, put a higher low in, and then go towards the end of the year, that would also be one. But remember, this is all news neutral assumption wise. So I don't know what's coming out. If there really is significant news that takes this market lower, IWM that is, then that if there's a real driver there, then we have to go with it, right? So you reevaluate and say, well, that's got more force to it, and I don't think they've discounted this enough. And that could be some of these geopolitical things that are happening. It could be some of these domestic political things that are happening. There's a lot of crazy stuff going on around the world. There's not a shortage of that. There may never be a shortage of it, but I feel like right now it's chock full of just madness and things that could escalate. And I still expect something to escalate in the next 6 weeks or so. I just will be stunned. And I hope to be stunned, but I'll just be stunned given the way that things are these days if we have this really smooth transition and inauguration. I just don't expect that to be the case. So there's that look. Let's jump back to our main sled dog SPY. Right, this in a way, right, this is actually pretty good that this happened. This does set them up, as I said. As of right now, they're working on a slightly higher low here. They have brought this back in a little bit. You're not back up over where you're near 70 on your RSI or something like that. Kind of where we finished, where we said this thing could definitely use a little chill out time. And look, they've got a good situation still. As long as they hold above the 20 there in blue, that's 600-ish, right? So right around 600's your big number, as they used to say, during my floor days. But you have to be a little concerned because of the technical deterioration we've seen with the sectors, so on and so forth, right? With the dollar, with the yields. You've got that. You've got market breadth really kind of getting rocked. You've got gaps. And so there could be, right, what there could be would, it would also, we should not be remiss to not mention this. Basically, you have the reverse of that start of the year selling that I alluded to that could happen if they jam into year's end. The other thing would be if things really worsen in the face of seasonalities, in the face of the birthright Santa rally and all the rest of it. The birthright of the window dressing on the final session of the year that pays out the max bonuses. The whole thing goes off the rails because when things start getting rocked, you could get very quick, forceful selling by people that don't want to give up too much between now and the end of the year that they feel like they were just about to cash in on. So there could be like, well, I better dump at least some stuff now because I don't want to give back 5, 6, 7% from here and get marked down that low. Just a thought, just sharing that. But I would think, right, you really probably want to see this thing touch and come near this 20-day and hold. So I would think that after you get through this, it would be the best course of action. But I think it's so tough of a call that you really just have to key off of the low on Tuesday, which was 602.13. That's the low of the week. And as far as the high, I think you're going to have to go back to this high close, right? If you wanted 607.46. So low volatility week in the SPY, not a lot of movement. You get above that, you get above Wednesday's close, which was the best close of the week. It pretty much is going to put you really close to this former support line, which would then be a resistance line. So it's got to work its way back through there and close above there. And that pretty much almost puts you at the high. But really, it's hard to really read much into this because we've sideways really for most of the week. You're not all that much different than you were. You're not all that much different than you were on Monday's close. Monday's close was 604.68. Right now we're at 604.41. So that's not a lot to work with. You could say, well, that's a breather, and you'd be right if you asked me. I would agree, right? So if you told me they're going to start no news neutral, they come in, start buying the market all over again, I would say that's the natural order of things myself. Because why? Well, because the market has chilled out for 5 days and we're in a strong market. It's got a strong uptrend. It's had strong monetary support, this, that, and the other thing. And we've got strong seasonality. And we've got Wall Street motivated to reward Wall Street. So all things being equal, right, you're going to go with the trend, stick with the trend, and to stick with one that's really strong. And you're not really overbought anymore. I think you're coming in right now, it's 59. So it's a nice situation if they're able to start moving it back up. There's really nothing wrong with that. Let's go to the Qs. The Qs, right, are making a new all-time high. But again, I think this is a combination of the earnings reaction and just not letting some of these megas go, which, again, luckily, I think we were able to come across that in the nick of time. That was a few weeks ago that we started talking about that, maybe helping the situation. It finally started to show up the last few weeks and did help the situation. It's helping it to this point. The megas are having a pretty solid week, even though they're giving a little bit back late. But you've got that happening there. Clearly, right, you're going to want to continue to go with that, but that is approaching overboughtness. You're getting towards 67 on your RSI. So just be careful there. You probably are going, I mean, you probably could use this close. It's going to be really close. Depending, I don't know, is your first area where you start getting concerned just visually. That's about 526. So yeah, if you kind of go down 1%, which is going to put you getting probably close to that rising 10 in white. It's going to be 525, 526. That's probably starts to become your concerned area. So as long as you're above there, you're not really sweating it, right? I mean, there's nothing really wrong with this. It's getting towards overbought. It's not really in an overbought situation where I would be panicking. I think I'd be more inclined to do what I said last week, and just if I'm still rolling in these things, I'm still rolling a lot more gingerly than I typically would. And the reason for that really has to do with the overall market more than it does the Q situation. Just market overall, market risks overall. that are out there, and some of the market issues under the surface that eventually do spill over even into strong areas like the QQQ, like the megas. Eventually, they get that reaper coming for all of them if the selling really intensifies, if things really pick up. But I don't think you're clearly right. You're not at that stage yet. So hard to argue against. I think 525 is just your nice round number, just to pull one out and say, okay, this is where you start getting a little concerned. As long as you're above there, you're probably okay. News neutral. As far as where it goes, that there's still, as we've said, I'm not even getting into that, especially because I'm running with one engine here. I feel like instead of four. But there's still, a ton of upside potential in this thing. I mean, there's one of our lines is right there, and that's really up there. I mean, you're talking another 20% almost. So yeah, I'm not even worried about that. Short term though, yeah, probably there's a little bit. I could probably drop a line on here for us to give us a little bit of an idea, just to say, I think, and you could tell that I'm not even in my office right now because my wife's cat Army is out here keeping me company. They think it's great that I can be tormented during the day. Let me try to get us. Yeah, so I think even right there, like just getting to there in the next couple of weeks is you could easily have a nice say, what would that be, about 530 to 560 something. Yeah, I mean, that could be definitely another 5% type of a jam job when these guys get a hold of things. So I think I mentioned this before. I still think this was in catch-up mode. This was undervalued versus the SPY, and we've seen some catch up, I think, on that, which is good. So at least some of the things we spent time on maybe helped out. So that leaves the diamonds. Excuse me. And the diamonds, right? These are still, again, massive upside potential still, but I don't even know. I think it's just the computer's getting hung up on me. But I don't know if they're going to let this go all the way down. I mean, this is really, right, 7 days of control. I think absent news, it's getting hard to really get this thing to come all the way back into here. It probably would take one really ugly day, the ugliest day we've seen probably in a while, or at least two more sessions where things are pretty ugly. And then I would think, right, under normal circumstances, without some major news driver, that selling just starts drying up. It's getting towards, for this type of a move in a bullish market like we've got, it's definitely getting stale, right, towards the stale side. Not there yet. I'm just saying it's getting towards the stale side. So if you do get a few more down, right, without a news story that's really a big mover, you probably should be covering most of your deltas. And again, even on the downside, which we think the market's got some problems that have developed, I would still be a ginger roller. I'm still not going to, when I get into day 10 down in a bull market, that is just, you're really going up against some, I think, tough odds that you get day 11 down without a story, without a real news driver. So you've got to, I think, weigh that and say, look, I might keep rolling because the momentum's still down, but I'm not sticking with 70 delta. I'm not sticking with 80 delta. I'm not going to keep rolling 80 delta. I'm going to roll, 35, 40 delta because I don't want to give much back. So those are the main four. I think you're buying this one above the 20-day in blue. You're going to have the 10 and 15 kind of bunching up there anyway. You can't wait forever. That the 20 days at 443. And I think I'd keep selling it for now down to the 50. But I do think if it gets to the 50, you probably are looking at them. You're probably looking at the gang trying to do something like this where they hold it near there and try to reverse it, because that's probably the natural flow to the ebb that we've seen here, right? That would really be the natural flow as we get into the 16th, which would officially be right the start of the second half of the month. So we'll be in the second half when we come back after the weekend. So usually good stuff happens then. So don't, again, just like I was saying the last couple of weeks, don't overplay your hand, especially last week. Don't overplay your hand as a bull in the market overall. I would not overplay your hand as a bear if this thing slides a little bit more. And you're right, you're right in the timing zone, the right window for the gang to start the end of the year festivities. Let's take a quick look at the VIX. Excuse me. The VIX is just absolutely dormant and crushed. So these guys are coming in, they're putting on their, I guess, hedges or speculations. And I'm not sure this is a legit print, so I would kind of ignore that 1062. But you're not quite near the lowest lows we've seen. We did get sub 12 a few times in the VIX this year. So, excuse me, with that in mind, I would say you're getting down there towards the lowest lows. So these guys are taking advantage of that. They are putting these big trades on, and that is no joke. So they're very large, some very large hits that are going on, 128,000 lots. They are to the upside, and that basically is telling me they're expecting some kind of a VIX uprising, something that really creates at least some serious short-term turmoil. So keep that in mind as well, but that is certainly still dormant. You're not seeing any real pickup in there quite yet, despite the hits that we've seen. So I think for just a quick and dirty stream of consciousness type thing, we probably should leave it there. Just remember this is not hedging. Just remember that dual edge sword of where, yes, the market breadth and sector views have definitely shown that there are issues that have cropped up in this market. There's definitely been deterioration. It's definitely being masked. Yeah, I mean, at the same time, that sets up the gang nicely for stepping in to buy stuff that's been beaten down to bring about that potential rally. And on that note, I'm going to switch over to this IBIT. I did see some interesting paper that's related to, we've had an idea in here. I don't think the idea has done much. I think it might still be good for like another week or so. I can't remember, but it's a bullish idea. This thing's sort of been meandering. They came back again for more. The charts on here, they look pretty good, right? It's really holding on to dramatic gains to this point. And you've got a little bit of negative divergence with some of your price action relative to the oscillators and so on and so forth. But this is close, right? This would be one that you can see a triangle in here. You can draw a couple different triangles in here. So you can see that this one's probably getting coiled and ready to do something. So as of now, it's really just an update. There's a couple other ones like Riot as well that we saw more paper on. I'm just kind of passing this along just to try to help out. Wow, man, you can see this is just a mess. Come on, Riot. Yeah, and Riot's kind of got something similar. It's not quite as attractive as IBIT has been, but you can see where this is really kind of working its way up here a little bit, trying to work up kind of in a sneaky little fashion below these highs. And they've got this kind of cup and handly thing happening in here. So again, under the right conditions, might not be a bad idea to keep your eyes on the crypto-related names. On that note, let's see if we can see if there's anything happening in coin here. I've been coin sort of playing possum too. How about MSTR? Oops. Yeah, the keyboard here, I don't know if just, I'm probably due for a new laptop as well. Hopefully my repairs will work on my desktop though, and I won't. Otherwise, I'm made a decision where I'm done fighting with Microsoft, and I'm just going to have to go to move to an Apple setup. I'm just had enough of all the years of just fight with this update, that update, this lack of compatibility, this slowing, this freezing. I'm done. I started out with Apple with the first Macintosh in 1984. I think I'm going back to it. I can't. I hung in there, but I'm getting worn down. I've heard some really good things about Apple. Apple's machines right now. People are saying some really good stuff. So as long as I can multi-monitor myself as much as I need to, I think I'm just doing that. But I'm trying to get through this without having to go that route just yet, because I've got so many other things happening right now that I don't feel like going for that full changeover and having problems. Anyway, so yeah, this thing to me, I think you get near that 4.25 level. If they get this thing back up there, that's when you're probably going to want to start paying attention. That boy, they could start to pour it on again. But yeah, there's some really there's some paper in the space. Thought it was worth noting. And you can just keep an eye on it for now. But if it's how it can be, if they get this stuff rolling, it can really roll and be explosive at times. So thought it was worth a mention, just for folks that stayed awake for this long. So let me just wrap up by saying I'm sorry. It's kind of a tough week for me, as you can tell. Hopefully we'll be back on track by next weekend, because I can hopefully get my surgery. I'll perform the surgery on my PC, and hopefully my new components will fix the problem. Otherwise, I'm heading to the Apple store and going for the gusto at Apple. But on that note, I do hope something that I share with you helps you out this week. I want to thank everybody for tuning in. Wish we could be on the ball a little bit more, but under the circumstances, I'm not feeling happy with what we were able to cover today. And I wish everyone a happy, healthy, safe, fun weekend, and a good week ahead. Just stay disciplined here. Let's get through this year end, whatever comes our way, and hold on to most of what folks have worked so hard for to gain all year. On that note, everyone take care. Thanks again.